Ladies and gentlemen, if you've been around on this YouTube channel for the last week, you would know that I've been discussing and focusing primarily on the $98,000 level on Bitcoin. That is a level that I deem to be the most important level that Bitcoin has faced since way back here in October 2024 when Bitcoin broke out from its descending wedge formation. This level, I cannot stress the importance enough, is absolutely critical, and we have just rejected from that level. Now, before we go full panic and crisis mode, which I never encourage whatsoever, but before we start stressing, I want to emphasize the fact that this rejection is most likely a short-term bullish pullback, and in this video, I'll be giving you some short-term targets through which Bitcoin can bounce from if it continues to go down, and also some levels Bitcoin needs to avoid touching altogether, because if we drop below certain levels too low, of course, we enter a bear market. So what we're going to do today is take fresh slate charts. We've erased everything from these charts. We're going to start from a fresh slate, and we're going to draw in everything you need to know specifically with no clutter, no bluff, no BS, just what you need to see. We'll try and keep it short and sweet. Ladies and gentlemen, let's get into it. Before we get into it today, guys, we have an exchange here that has never been hacked before in 3.5 years of being on the market. That is global non-KYC. You can sign up from anywhere in the world and use this exchange without a VPN. And furthermore, with my referral link down below, you can get a 15% trading fee discount attached to your account for life, as well as $8,000 plus USDT in trading rewards added to your account as trading bonuses for signing up with my referral link down below. This is big stuff here. It's an excellent deal. I reached out to them for partnership. They did not reach out to me. I don't get paid by them. The only thing I get is a referral link. And if you want all those things I just mentioned, which you should, trust me, I've done the scouting of the market, you can use my link down below to sign up. It takes 30 seconds and you'll get those rewards and bonuses and you'll help out the channel. I appreciate that, guys. Let's get into the content. So in a similar fashion to what happened back here in 2024, which I mentioned in the introduction, Bitcoin saw a pattern of correction, a pattern of consolidation and correction. It went down for a pretty long period of time, and people thought that was bearish when it was happening. They thought the Bitcoin was potentially ending the bull market. Even on my YouTube polls, a lot of people were leaning a lot more bearish than I thought was justified. But overall, we remained above the critical support block, which in my view was between 74,000 and around 70,000. Or 68,000 even. I'll make that green just so you can see it very clearly. That was a critical support block because that was the range high of basically the entirety of 2024's price action. That's where we failed to get above for most of 2024. It's the level that we rejected from for months and months on end, and it's the level that we finally broke through at the end of the year in 2024, and that we came down during this correction and flipped for support. So if anything, what we did over the last month or so in flipping that $74,000 level for support was actually very bullish. I suppose it just seemed a little bearish to a lot of people at the time because it was taking so long, and people aren't used to seeing bull markets behave like this. Bull markets, generally speaking, on Bitcoin historically, especially the 2017 and 2013 bull markets, but even 2021 to some extent, were very quick, very fast paced, very greedy. Okay, the market went up very quickly and corrections were very short-lived, generally lasting within a few weeks to a month. And this time we've just seen longer, drawn-out corrections, not necessarily making the market more bearish, but making the market a lot slower, and people aren't used to that pace. Okay, they're used to the quickness and the speed and the dexterity, and so seeing the market move this slowly in what's meant to be a 4-year cycle bull market makes them think that something wrong is happening. And at this point, we just have no reason to believe that anything wrong is happening. We have reason to believe that the market is changing, the market is maturing. And overall, Bitcoin did bounce from that 74K region and break above its descending wedge, and it skyrocketed right up to where it is right now, which brings me to the topic of the video, where Bitcoin is right now in this vague region, right, around 98,000, just below 100K, just below that psychological level of 100K, is possibly, in fact, I think it just is, objectively, the most important resistance level that Bitcoin has faced since the end of 2024 when Bitcoin broke its major descending channel back here in October last year. And that is simply because this is the area of most resistance on the chart that you can see on the screen right now. You can see right there the POC, the point of control on the volume profile, an indicator that literally measures how much buying and how much selling has taken place at certain price regions, says that this is the sharpest level of resistance on the entire chart, around 97,000 and stemming upwards to 98,000. Therefore, this level at 98,000 is, as I said, the area of most resistance, and we have so far rejected from that level with a daily candle close right on top of the POC and the volume profile. Now, taking this with Bitcoin alone as the evidence is one thing, but when we look into the other charts, when we look into the total cryptocurrency market cap, and we draw lines stemming backwards from the 2021 all-time highs, from the wick, okay, and from the candle body itself, what we see is that the total cryptocurrency market cap is, just like Bitcoin, seeing a breakout of a descending wedge formation that has run straight into resistance at this level. Not just any level, right? But a level that is the psychological resistance zone of $3 trillion, as well as layered resistance from the all-time high in 2021, as well as prior support from back here that lasted for months, which is now being flipped as resistance. So I cannot stress this enough. I said it in the other video. I will say it again today. I do think that these levels on the total cryptocurrency market cap chart and on Bitcoin at 98,000, 3 trillion for the total, are the most important levels of 2025, and actually stemming backwards further, probably the most important levels since back here in October 2024. So the most important levels for about 7 months, which is a very long period of time. And the fact that we're rejecting from those levels is a little bit concerning, but not completely unexpected. In fact, I said that was the likely scenario. I said it in this video right here, the biggest moment of 2025. I said we will likely see a short-term rejection from a level this big, given the fact that we've already seen a massive amount of momentum expended on this breakout so far. So where will a pullback take us? That is the question we're going to be addressing now. And for the sake of clarity, I think in order to address this question, we disregard the total cryptocurrency market cap chart and we look purely and strictly at Bitcoin. I'm once again going to clear this chart just so you can see exactly what I'm drawing in here. I'm going to go backwards to the 2017 bull market, and I'm going to draw in a very important resistance line which characterized the top of Bitcoin's prior macro range. You can see multiple retests over the history of Bitcoin at this line right here. We also have a support line from 2021, which also found support. Bitcoin found support on that support line for many months throughout November through to February once we finally lost it. And right now we seem to be finding some degree of support on it once again. You can see right there on the last few daily candle closes, we've seen a couple of retests of that region. So this right here at around 92,000 is actually a support zone. It's a support zone that has been provided from the level, which was the bottom of our prior macro range before this nonsense occurred and we dropped downwards. So actually we have support right here at 93,000, which could very well hold. Now, small issue, we are seeing some sort of ascending, broadening wedge formation, okay, which is the top line of a channel, I should say. It actually is a wedge, though, by definition, but honestly, it looks more like a channel. It's a wedge, and the fact that it's not parallel, though. Ascending, broadening wedge formation is a bearish structure, and that's what we're seeing right now, where it looks like a channel, but not quite parallel. The lines are actually moving and deviating away from each other. That is a bearish formation. That is a formation of exhaustion, a pattern of exhaustion, and a pattern that we should realistically see a breakdown from, although it is slightly complicated by the fact that we have such big macro support right on top of the breakdown line of that channel. So that wedge, sorry. So we very well could be seeing the bottom actually right here in this short-term pullback, which would be absolutely excellent, of course. But I want to make something very clear. It would not be the end of the world whatsoever. It wouldn't be a bad thing at all if Bitcoin went all the way down to something like 98,000, which is actually the neckline of resistance for our W formation, our double bottom formation that we had, which formed throughout the entirety of March and into April, right? We had a double bottom formation with that neckline at 88,000. And if we went downwards again and retested that $88,000 neckline, it wouldn't be that abnormal because, again, this macro structure has already been deviated from, so it's not exactly so precise that it needs to hold by any means. It wouldn't be a big thing to break it down once again. And we do generally see resistance support flips from double bottom formation structures at the neckline. So I would say that Bitcoin is likely to bottom out either right here at 93,000 or down here at 88,000. If it went much lower than that, it wouldn't necessarily be the end of the world. It would just be slightly abnormal and a very big display of weakness. That's when we'd start to get our eyebrows raised. That's when we start to get a little bit cautious in the market. But as long as $88,000 holds, I don't really see any reason to be concerned here about a rejection from that $98,000 region. Now, more broadly speaking, if Bitcoin is going to go into a bear market, basically we need to go downwards quite far, right? I would say that the center line of the weekly chart Gaussian channel is the bear market indicator that we need to be watching out for. When we have moved through this center line historically, that middle line of this Gaussian channel here, we have moved through the entire Gaussian channel. So we move through the center line, we move through it. We move through it on the direction we came. So if we move into it and through it from the upside, we move through the Gaussian channel to the downside with a big macro swing. This has never failed before, okay? So if we were to break through the center line of this Gaussian channel, which currently sits at around, let's say, $70,000, which lines up with the top of the prior macro range, then Bitcoin would likely enter a bear market. But until we do that, I don't see a reason to believe that Bitcoin is in a bear market. I see dramatic strength on Bitcoin above 88,000. I see some weakness showing between 88,000 and 70,000, and below 70,000, I do see a bear market for Bitcoin. But I think that Bitcoin will continue this bull market. I think we are in a solid position here, even though we've just seen a major rejection. Obviously, I'm not sitting here and saying it's time to sell the car and buy Bitcoin or buy crypto. I don't think that. I think we would like to see a macro breakout before getting too confident. But at the moment, I don't see any reason for massive short-term bearishness, or massive, I should say, long-term bearishness. So guys, thank you for watching. I hope you enjoyed. If you enjoyed the video, please leave a like down below, subscribe, go to the comment section, tell me what you think if you want to do that. And also, importantly, check out the Bitunix Exchange. This is for your own good in a lot of ways. It's a global non-KYC exchange. You can sign up to it from anywhere in the world with just an email address and a password. No VPN required, which is especially useful to some of my US viewers, which are getting hammered down with regulations right now. It's very low in trading fees. It's never been hacked before. All these things make it an excellent exchange. I use it personally. Okay, I did not reach out to them. They did not reach out to me for partnership. I reached out to them. That's how much I like this exchange. So I'm not lying when I say that. 15% trading fee discount down below with my referral link. If you want to sign up, that's where you can do it. It's just down there in the description and pinned comment below, and you can get that trading fee discount. You can help out the channel and you can help out yourself as well. Guys, thanks for watching. Hope you enjoyed, and I'll catch you soon.